Good afternoon, traders, and welcome to the Hot Stocks Outlook for August 31st, 2016. So the last 2 months, July and August, have really opened up some tremendous opportunities for equities traders. I mean, there's just been absolutely great opportunities all throughout the different sectors of the US stock market. But what I want to demonstrate to traders is not only how they can recognize these opportunities by utilizing the intermarket analysis software here, the VantagePoint software, but understand how that software works and more importantly, how to really insulate that portfolio. So currently we have the S&P 500 starting to roll over a little bit here towards the end of August. And what VantagePoint allows traders to do is understand in each and every market that they trade, when you want to be getting long, when you want to be getting short, so that when those big global intermarket relationships like the S&P 500 start moving stocks, aggressively up or aggressively lower, you're already on board and in position to capture that increased volatility and that activity in the marketplace. So here we have Invesco shares here, and I want to go explain everything on the chart here and also how this software works, because once you understand the concepts and what the technology here is doing, it's easier to understand how it gives you a huge leg up over other traders here in the marketplace. So here we have Invesco shares, financials, just a really great sector as far as the last couple of months as far as opportunities go. But what I want to do is go into some of the properties here, and I'm actually going to show what's called the intermarkets. Now, VantagePoint does what's called intermarket analysis. It's looking at patterns and relationships that occur between markets, but what it's able to do is analyze the 25 to 30 most closely related markets and how they're affecting, driving, and influencing that one target market that you're getting ready to trade. So obviously, when we're talking about financials, we want to be, paying attention to, hey, what is the financial spider doing? What is the S&P 500 doing? The value growth index. But what this technology is able to do is, not only analyze those big macro relationships, which are going to affect every single trader, in the market. If you're trading anything, an equity, a currency, a commodity, those big macro markets like crude oil, interest rates, the dollar, the yen, these markets are critical and understanding how they're affecting your trading. But what the technology is able to do, this artificial intelligence of neural networks, it's able to find a lot of these more subtle relationships that often trip up traders in the marketplace. So relationships that are occurring in ETF markets where a ton of the trading is happening nowadays, individual US stocks, so competing companies, similar companies that trade in tandem. We even see here that there's determined to be some correlations here with tech stocks. You got Intuit, First Solar, Oracle. So very important to be doing this type of analysis, and what it allows for us to do is essentially build that information into predictive indicators that forecast prices moving forward, help traders make much better trading decisions in the market as far as direction and timing of their trades. Now, here in Invesco here, all of the data is daily bars and candles here. So you see we have these candlesticks, the green days being the up days, red being the down days. But what I want to explain to you are these two lines against that price data. Now, the black line that you see on the screen, that is a simple moving average. So a regular lagging indicator just simply tracks closing prices, averages them together, and plots that line for you. So that tells us what the market's currently doing, really just smooths out the data for us, but is really a lagging indicator in the truest sense of the word, in that, it is simply going to react to the next close price that's generated from, the daily trading. So always very reactive to price. Now, the blue line that you see on the chart there, that is VantagePoint's proprietary predicted moving average. Now, before that line is plotted on the chart, those those neural networks are performing that intermarket analysis. So in the case for Invesco shares here, the technology is looking at those 25 to 30 most closely related markets, figuring out, what are they doing? Are they rallying? Are they moving lower? Do these relationships, are they positive correlations, negative correlations, leads, lags in the market? So before that line is plotted, that blue line on the chart, that predicted moving average, it's weighing all those relationships. And so what we're essentially looking at is a comparison between a predicted moving average generated via the artificial intelligence and neural network process and an actual moving average, just really telling us what the market is currently doing. So for traders utilizing this approach, we keep things very, very simple. We're really looking for situations where the blue line crosses above or below the black line. And what that represents is a trend change. And these trend changes are important because we want to get early on these trend change, whether that's, buying options or buying calls or puts, just going ahead and buying the shares. But this is what helps you identify the direction, the opportunity, but also make sure you have good timing on getting into that trade there. So that's the predicted moving averages. And as long as the blue line remains above the black line, it's suggesting the market's going to continue moving higher. Now, what we want to do and what really brings this forecast to really a complete forecast, so we know exactly what to expect over the next few trading days moving forward, is we have this extremely accurate neural index that you see at the bottom of the screen. Now, the neural index is an extremely accurate 48-hour indicator. You see here P index, that's for predicted neural index, and it can only be a value of a 1 or a 0. And what it's doing is forecasting short-term strength or weakness in the market. So it's actually a 48-hour indicator. It's looking 2 trading days ahead. So you always have to remember it is a forward-looking indicator looking those 2 days ahead, letting you know, hey, should I be a buyer over the next 48 hours or essentially a seller? So when traders identify that, okay, well, there's been a crossover in the marketplace or from the VantagePoint software, and we also see the neural index matching that, that's really that double confirmation that says not only has there been a trend change, and you're going to want to be long as that predicted moving average remains above the actual, but you should at least expect some strength over the next 48 hours. And so as long as that neural index holds up at a 1, it's still forecasting that short-term strength over those subsequent 48-hour periods. So for traders, they simply want to use the software in a very straightforward manner, getting in at the crossovers and obviously getting out when that directional change has occurred. But you see here in Invesco shares, about a 21% rally higher since the market was forecasted to move up. About $5 per share, you're looking at, easily 500 shares here of about a, pretty cheap stock, easily a couple $1,000s, about $2,500, $3,000 on a single trade. And you see that this market is still moving higher. The one thing that I want to, have you focus on, especially when we get through a few of these next charts there, is the accuracy of the neural index. So that continued 48-hour forecast that says, look, expect this market to move higher. You're going to get that indication moving forward all the time. You may have these dips where the neural index goes down for a couple days, and that just suggests, there may be some short-term weakness in the market, but you know where the trend is. That blue line and black line showing that separation says direction is still up. You may get some sideways and down over here, but you want to go ahead and hold out and obviously, catch this move from about 29.50 up to 31 there. So that's how the software works. It's very intuitive, very straightforward, but it really allows traders to prepare for these, great rallies like this that we had all through the month of July and August, but more importantly, really insulate that portfolio. So understand, hey, where do I want to be long? Where do I want to go ahead and set short positions? And so you can really mix that portfolio with a mix of longs and shorts. And when the S&P 500 starts going all wacky, you're making money, to the upside or to the downside. So here in Dollar General, a lot of volatility in this stock. Unfortunately, I had a buddy who, for some reason, got burnt on this stock. He doesn't trade this way. But crossover all the way back here at the beginning of August saying, look, this is not the time at all to be long Dollar General. You actually see this neural index when you get these periods of it holding down at a 0. You start to get more of those aggressive push lower and really no reason to really get back long this stock at all. That separation between the blue and the black line. And what's critical about this is, the software here works the same whether we're through earnings reports, FOMC statements, has an extremely high level of accuracy through all the sort of fundamental data that can hit the market. And so you really want to be prepared for these things ahead of time and understand, look, it's time to go ahead and get short. No reason to be long going into this event here. And a 19.5% move to the downside in about 18 trading days. So we'll have to see how low that goes there. But the software, again, really having that extremely high level of accuracy throughout all market conditions to the upside, to the downside, truly an extremely accurate market forecasting tool. So like I said, as a trader, regardless of your style, you know what to expect over the next few trading days and can adjust yourself accordingly and make much better trading decisions. Very interesting development over the past couple weeks here are the utility stocks. A lot of people are heavily invested in these areas of the market, but sometimes it is not the best time to be there. Great rallies over the first part of the year, but we look at the ETFs, we look at, all these utility companies, and it was really telling you, look, time to go ahead and look to go ahead, step aside from the market at the very least, even look to take some short positions or buy some puts for protection action, but about a 6 or 7% move so far. And certainly if some volatility comes into the market, I mean, we could see some pretty aggressive moves, I believe, in some of these utility stocks, but certainly want to be aware and cognizant of these things several weeks ago, that the utilities were going to start turning lower and you wanted to go ahead and act accordingly. So, like I said, whether it's these financials that have just been, going crazy to the upside, like Invesco here, or, State Street, some opportunities we've gone over in the past. You also want to be able to, like I said, insulate that portfolio with markets that are not ready to aggressively move higher. So last opportunity here, moving over to the tech space. And this is the key here is, keeping this very, very simple, making sure that your trading decisions match the accuracy of the highly accurate forecast, these predictive indicators here. So you see, we started to get a forecast of the market to move higher at the beginning of August here, and it certainly did. You see this huge separation between the blue and the black line. Neural index constantly holding up there saying 48 hours, keep expecting that market to move higher, move higher. Really only one day it dips down here, but that's really the rally you want to get in on, that move up to 23. So you see here that, let me go ahead and get some of this writing off the screen here, but great rally higher thus far. Markets moved up here about 17%, about $3.50 a share on a $20 stock. So, I mean, easily 1,000 shares, buying options contracts, making about $3,500 in really just the month of August so far. Now, if you're a shorter term trader, great opportunities here to be, pushing when this neural index is up at a 1. You're really expecting the market to move higher over these trading days here, and you get that nice move. But we look more recently here, and look what the neural index has been doing, saying at least looking to get some sideways action. Manage your long-term trades, trail up your stops and all that, but not looking to push the market higher. At least not here in the very, very short term, with this neural index giving you just a lot of weakness there over the subsequent few days here. So 17% so far. We'll have to see how that shakes out. But these predictive indicators really simplify the process for traders. Have them focused on, hey, what is the direction of this market? Should I be a long? Should I be a short? And then helps you with that timing, literally help you, understand what should I expect over the next couple of trading days. So you're not getting emotional. When you understand what to expect, you're really ahead of it. You understand, okay, I understand where my equity might move today, where the markets may move, where I want to be adding to positions and so on. So it really simplifies the overall process. So thank you guys, for watching this demo. I really appreciate it. Best of luck to all the traders out there. And of course, thank you for watching, and bye for now.